Another good start this morning, already better by 0.5%. Is it too late to join this trade, though? Do you still see some buying opportunities in Japan as we sort of await the get-go of the next earnings season?
Thanks. Yes, there is still opportunities to buy in Japan because we're looking at a structural change in the markets. So, of course, the biggest catalyst is the improvement in the corporate governance in Japan, encouraged by the Tokyo Stock Exchange, and also, manifesting in the fact that share buyback has been at the highest level for a 12-month period, ending in March this year. And also the fact that there's increasing dialogue between the companies and the investors. That's all encouraging to see. That is the catalyst that can bring Japan higher from, the long-term cheap valuation discount that Japanese equity has displayed versus global equities.
We've got a conversation starting now, though, about the Bank of Japan and the potential for tightening. And we heard some from policymakers in Japan this week, some concern about the weakness of the yen. And we do have the yen strengthening right now, 138.77 against the greenback. How does yen strength and the outlook for the yen over the next 12 months affect your interpretation of equities?
Okay, so the conventional wisdom is that weaker yen is good for the company earnings because Japan is, heavily tilted towards the exporters, right? But, of course, that's what we've been seeing over the last, few decades, two decades, right? And of course, at that time, the Japanese stocks were relatively stagnant. It was range trading. But like I said, this corporate governance has been Achilles' heels in Japanese companies, and that is what we're seeing as a structural change. So we believe that factor can overcome the strengthening in yen that can impact the earnings.
You've closed your preference for China within the region. Tell us why.
Yeah. Well, okay, so basically what we're seeing is that the low-hanging fruit, right, in Chinese equities that people were seeing immediately after the reopening, right? That's basically in the background now, right? The numbers, economic numbers, really have to deliver in order to entice investors to be in Chinese equities. And as you're well aware, recently for the past 4 to 5 weeks, the economic data has been underperforming expectations. Okay, so one can argue that there were too much hype in the economic data in the Chinese equities starting from end of November last year. So we are in this correction in Chinese equities. They tend to overshoot and undershoot more severely than the rest of the global equities. So we're actually in that stage. Now for the longer term investors, right? Of course, the valuation is still cheap in Chinese equities. So if you have a 6 to 12 month horizon, there are some interesting sectors that you can get involved in, okay? But people have to be a bit patient. You need to wait for the economic expectations to be lowering to a certain extent, such that data can start to beat, and also the government's, targeted stimulus comes into place, and you can see some upswing in Chinese equities in a 6 to 12 month horizon.